What's up, guys? This is Rey-Jay back with another video, and today I want to break down what's happening with the overall markets. I'm going to talk about some things that Donald Trump said and did that caused the market to get a massive rug pull at the end of the day. I'm also going to break down what's going on with the tariffs for tomorrow, as we have more that could be imposed, not to mention some new developments on the charts, which are going to be very, very important. So just know a couple of things. I am firstly not a financial planner. Make sure you take nothing as financial advice. And then don't forget about my Moomoo link. If you deposit $100, you're guaranteed 5 free stocks. Deposits $2,000 and you're guaranteed at 30, not to mention 8.1% APY on uninvested cash. Anyways, as far as the market's going, as you guys can see, the market got this big sell-off. SPY is now down 1.75%, despite the fact that it was bouncing in the morning quite green. Despite the fact that it was trying to form an inverse head, shoulders, and bounce, it got a sell-off towards the end of the day. We got a big rug pull. The QQQ is down 2%. The Russell 2000 is down 2.7%. ES is kind of flat, but we're seeing other futures a little bit more red. And then on top of this, we're seeing big tech selling off quite a bit. Nvidia is down 8.69%. Tesla's down almost 3%. The whole market came down except for health technology and consumer non-durables. Besides those two sectors, the majority of sectors are in the red, seeing a massive, massive rug pull. Even finance is quite red. So why did the market get this big sell-off at the very end of the day? What happened? Let's talk about this. There's a big piece of news that came out. The White House has confirmed that Donald Trump has signed an action to tariff China at 20%. It's been signed. It's done. Donald Trump just did this. This is huge. So was this a surprise? Not necessarily. I did mention that Donald Trump has been saying for a while he wants to increase tariffs. We were just waiting to see if this would be another negotiation tactic or not. But in this case, he's very, very serious about them, and he's continuing to escalate his tariffs. So today, this was actually not too far from market close, about an hour before close. Donald Trump has signed Executive Order 14195 that hikes tariffs on China on imports from 10 to 20%. He's mentioning that this is happening because of a big issue in America, and he's blaming China for it, just to be very, very frank with you. And he believes that this is his way of standing up for the U.S. against trade deficits and also against what is going on. That's what Donald Trump is arguing. And then he also said that, and I quote, tomorrow, tariffs 25% on Canada and 25% on Mexico, and that'll start. That's what Donald Trump said. That's his exact quote. He's saying that he's going to increase tariffs again tomorrow, so that's very, very big news. Now, what does this mean for us moving forward? Well, keep in mind, guys, this is not really a surprise because I showed you guys this timeline on Sunday about how the tariffs on Canada and Mexico were scheduled for tomorrow, March 4th. Also, the Chinese ones were scheduled for tomorrow as well, an additional 10% on them. Instead, he actually signed the order today for China, and he's saying he's going to do it again tomorrow for these other countries. That's very important. I know people have been asking me to talk about the main reason exactly why. I don't really want to mention, products like this on my channel. I can't really do that. But I just want to make it very clear that Donald Trump's reasoning is because he wants to do what he deems is fair for the U.S., stand up against injustice, and he's saying that he's trying to stand up against trade deficits and make the playing field more fair for the U.S. That's what Donald Trump is arguing. You may agree or disagree. That is your choice, but it's not my job to tell you that. I'm just here to lay the facts out for you guys. So with that being said, I also want to mention that Donald Trump is giving a very important speech tomorrow. He's going to be addressing Congress, and this is going to be happening at 9 o'clock p.m. Eastern Standard Time. A couple of hours after the stock market closes, Donald Trump will be giving a speech tomorrow in front of Congress. This may cause a big move as we get into Wednesday. So keep that in mind. This is going to be very important for tomorrow. Now, I also want to add that Donald Trump put on his Truth Social page, he posted that tomorrow night will be big. I will tell it like it is. So very important stuff. He's probably going to be talking a lot about his tariffs, how he's trying to stand up for America, and etc. That's his opinion. So I would just want to make that very, very clear and make sure you guys are ready just to be safe. Now what I want to do is kind of review these tariffs, give you guys some insights about what they mean for us. So just as a quick reminder, these are the biggest individual trade partners of the US right now. 16% of our trade comes from Mexico, 14% comes from Canada, and about 11% comes from China. Combined, they make up almost half our trade, so keep that in mind. That's going to be very important for us moving forward, and this could be affecting us in a lot of different ways. Don't forget that nearly half of all imports, more than $1.3 trillion worth of them, come from Canada, China, and Mexico, and that's going to lead to a very, very big shift One thing that could be happening is that many economists are saying that this could de-incentivize these countries to trade as much with the US, and this could actually reduce imports by about 15%, according to reports. And a lot of this comes from research from, very, very credible sources. So I want to make that very, very clear. We're looking at the Council of Foreign Relations. This is, from their website, and then I have more data as well. So here's the important thing, right? If you look at our numbers specifically, when it comes to our imports, $430 billion worth of imports come from Canada, about $480 billion come from Mexico, and we also have about $448 billion that come from China. So combined, it's over $1.2 trillion, if not more than that. And that's very, very big for our economy, right? They're the three big trade partners for us. So when it comes to these specific products, keep in mind that when it comes to our auto products and manufacturing, we have Canada has about $35 billion worth of these imports, and then $45 billion come from Mexico. But we do depend a lot on Canada for petroleum. So keep that in mind. $97 billion plus worth of imports come from Canada for petroleum. And then this is also going to be affecting phones, computers, motor parts, and the list goes on. So one thing that the study has found is that a 25% tariff on Canada and Mexico could raise production costs for automakers, adding $3,000 to the price of some, roughly 16 million cars sold in the US each year. Also, don't forget grocery costs could start to go up as well. Mexico is the United States' biggest source of fresh produce, supplying more than 60% of the US's vegetable imports and nearly half of all fruit and nut imports, right? Very, very important stuff. Don't forget the US, despite that, we still actually rely less on trade than our other peers. So it's not like all of our products come from trade or anything like that. Relative to our GDP, it's actually a little bit smaller compared to other countries. So I want to make that very clear. It's because the US economy is so massive that $1 trillion is actually not that massive of a percentage of our GDP, right? You have to remember that. Compare that to like countries like Japan, Germany, which actually have a bigger percentage of their GDP that comes from trade. Anyways, so how could they affect these other countries? Just to be very, very frank, if you look at like Canada, for example, 78% of their exports go to the US and then 22% to the rest of the world. So they're very dependent on the US. Whereas for the United States, only about 14% of our imports actually come from Canada. So Canada definitely depends a lot more on the US than the US depends on them. Just looking at this, for Mexico, 15% of America's imports actually come from Mexico, and that actually makes up 80% of their exports. So Mexico and Canada, they depend a lot on the US. If you just look at these charts, they depend on the US more than we depend on them. And then on top of this, I just want to add that for China, they're not really in the same boat, because when you look at China's numbers, only about 15% of their exports actually go to the US. Still, 85% of their exports go to the rest of the world. That also makes up about 15 or 14% of our imports. So it's more even between China and the US. So just keep that in mind. Each of them are not as reliant on each other. We do rely on them, at least to a large extent, but like not as much as like how like Canada depends on us, for example, right? So that's very, very important. So what's going to happen from this point on? We're going to be looking for a lot of products to be affected from petroleum, cars, and a bunch of other things. It's going to be causing a lot of changes, and this could contribute to somewhat higher inflation for the short term. And I will talk more about that in just a minute. There's even more products that are going to be affected. I'll talk about those as well. I think I see a list of other products that could be affected by the Canadian tariffs. So, for example, if we get 25% tariffs on Canada, this could be affecting petroleum, wood, charcoal, aluminum prices, iron and steel appliances, cereal, flour, starch, milk products, dairy products, rubbers. The list goes on, guys. Umbrellas, walking sticks, carpets. It's just a bunch of different products. How about on Mexico? So for Mexico specifically, by increasing the tariffs, it's going to be affecting cereals, paper products, processed fruits and nuts, tropical fruits, tomatoes, onions, lettuces, cabbages, and the list goes on. Lots of liquor, beer, dairy products, eggs, the list goes on, right? So just keep that in mind, guys. It's going to be affecting a lot of our food prices. And then on top of this, the tariffs on China could also be affecting lots of different products. When it comes to just agricultural products, we're looking at like fish, vegetable oils and fats, vegetables, especially like corn, fruits, nuts, cereals. The list goes on, guys. It's a lot of different products. So lots of different foods are going to be impacted. Lumber, steel, the list goes on, guys. This is going to be very, very big. Now, on Donald Trump's timeline, we're not necessarily done with tariffs because you have to remember that this is just the beginning, basically, right? Because when you go down on March 14th or March 12th, excuse me, guys, we have steel and aluminum coming next. Donald Trump wants to impose more tariffs on those. Then he has more reciprocal tariffs on April 2nd. So this is just the beginning of his tariffs. There's more to come for many, many weeks. So just keep that in mind. Lastly, I just want to mention that there's been some news that Canada says it wants to now retaliate against the US and increase tariffs on some of our products. I think the specific details are to be determined, but for now, that's what they are saying. We're waiting to see once Donald Trump imposes tariffs on them, then they were going to probably start to retaliate. So keep that in mind. They did say that the last time. So why is the market selling off? Well, keep in mind that we are scheduled to see 25% tariffs on Mexico and Canada as soon as tomorrow. That's what Donald Trump has been saying. And then we already have 20% tariffs on China now. We're going to be listening to see what happens with the EU. Donald Trump did threaten 25% tariffs on the EU, not to mention like automakers and etc. And then semiconductors will be affected and a bunch of different things later on. But that's what we're seeing so far. This is the schedule. This is going to cause our GDP to contract, trade could slow down to some extent, and then inflation could go up for the short term, which doesn't mean that prices just go up and down. It means that the rate at which prices go up is going to increase just for a short period of time for the first like 3 to 6 months. And then as time goes on, prices which are going to remain elevated, the rate at which they go up will slow down over time. So that's what we mean by higher inflation for the short term. And then other countries may try to reciprocate. They may try to increase tariffs back on the US and try to fight back. Maybe not reciprocate, retaliates is what I was trying to say. Sorry about that. And then finally, businesses could have some more bankruptcies for the short term. This is why the market's responding this way. The government's going to make more revenue from this. The government's going to make more money. Is this going to really offset everything? We'll have to see about that. Donald Trump is also saying this is going to lead to more fairness. So just keep that in mind. That's very, very important. He thinks this is very, very much for fairness because of what other countries do to the US, how the US is being screwed over. And this could also be used for negotiation. We'll see about that. For now, I don't think that's what his main intention is. I think he really wants to just increase those tariffs. So keep these numbers in mind. We're going to be looking for another increase. We'll see when Donald Trump signs the executive order tomorrow, if he does. And then on top of that, he's going to be speaking in front of Congress tomorrow evening. So very, very big stuff so far, causing lots of fear for the markets. Tomorrow is also going to be Tuesday, March 4th, 2025. At 8:55 a.m. Eastern Standard Time, we have the Red Book report coming out, which is quite minor, not too serious. And then we have the Economic Optimism Index report at 10 o'clock a.m. Eastern Standard Time. May cause a bit more volatility. Then we have Williams giving a speech at 2:20 p.m., so wait for that. So much of the data is quite minor, except at 10 a.m. there might be some volatility. Two more things. We have some more earnings coming up. We have Target, Best Buy, AutoZone, and a few more announcing their earnings. Then we have CrowdStrike and a few more. That's pretty much it for tomorrow. There's nothing else that's too insane until we get to like Costco. And then lastly, we have the Fear and Greed Index currently at extreme fear. That's making up the majority of sentiment right now. We're not really out of that fear zone. We're seeing the market looking very weak. We're at the 125 daily moving average on the S&P 500. Historically, for the last few years, that's been a strong support. So we'll see if this holds us up or not. But for now, the market is still looking weak despite the fact that it's testing that. The put to call option ratio is also at 0.81 right now. It's still going up a bit as more shorts are being bought. And the VIX is at extreme fear as it's breaking out right now. So it's still favoring the downwards direction for the markets. With that being said, that's enough about all this tariff talk. Let's focus on the charts now. What is likely going to be happening? Well, I want to note this low down here around this 575 area. So going into tomorrow, what I think is going to happen is we're going to try to gap up because futures are green right now. And we're also seeing that the market's trying to push in the after hours. It just got this very, very big amount of panic with these tariffs. But here's what's going on. So if the tariffs are priced in and we're done with selling, just hypothetically, you want to see SPY essentially try to get back above 590. If we could get back above 590, this could attempt to rebound. But one thing that's worth mentioning is that for the last 6 out of the last 7 days, SPY pumped and dumped, pumped and dumped, pumped and dumped, pumped and dumped, pumped and dumped. We had one big bounce on Friday. Today we tried to pump a bit more, then we dumped again. So 6 out of the last 7 days, we pumped and dumped over and over again. And that's the trend so far, as the market's not showing signs of a true bottom quite yet. So with that being said, here's what I'm essentially watching for. Watch 585 as our support, or maybe it's resistance right now. We're just barely at it right now. And then if we get back above that, I'm looking for 588 to 590. If that breaks, we're looking for 595. If we turn back down and lose 585, we're looking for a dump towards the 580 area, which is where this trend line happens to be. If that fails us, we could be dumping all the way down towards 575. This low right here could be attracting us lower. If we end up losing 580, we're looking for 575 or below. So keep that level in mind. These two trend lines are going to be our supports. The yellow one, we're barely holding that one. If that fails us, I expect us to test the blue one around 575. So please be very careful. The most likely possibility is that we will try to rebound tomorrow morning. We might see some buyers defend, try to push the market a bit higher. But then what's going to happen is the move might not last. And then we might be looking for another rug pull if Donald Trump causes more havoc. If he does say more things about tariffs or sign another executive order, there's going to be a risk of more downside. So expect a little rebound in the morning, just like what we're seeing, just like what we saw today in the morning. As the day goes on, we might start to consolidate. We might see like the mid to high 580s in the beginning, but then as time goes on, if Donald Trump signs another executive order to increase tariffs on, Mexico and Canada, if it causes more fear, watch that 585 area. If we can't hold it, I do anticipate us to retest these lows. The lows from, I think that was Thursday, it was Friday when we tested those lows. This trend line right over here around 581. If it doesn't hold us, I'm looking for 575 as our target, and we'll see if we bounce off that. This is looking very probable because 6 out of the last 7 days, the market pumped and dumped. So just be very careful. We'll be watching it in real time, depending on what Donald Trump says. And also keep in mind, guys, it's difficult to predict everything because of how the market's responding to tariffs. So please be a little bit more careful with the way that the market's moving. To add on to this, the QQQ has the same trend. It pumped and dumped, pumped and dumped, pumped and dumped, pumped and dumped, pumped and dumped 6 out of the last 7 days, right? There was only one big green day, which was Friday. And besides that, we've been just dumping and dumping and dumping. 7 days, we had basically, 6 out of 7 days we were red and only one green day. So I anticipate a very similar move as SPY. We should try to rebound in the morning looking at futures, try to get back up to like 503 to 505. But we want to see this break past 512 to really bounce. If we can't do that, then we're looking for another move down, so kind of like a pump move. And if Donald Trump causes more fear with his tariffs, we want to see if this could hold 500. If not, I do expect us to revisit these lows. And we could be looking for the very low 490s all over again. Now, that's going to be very important, so make sure you guys keep that in mind. Donald Trump's tariffs will cause a lot of volatility. There's a good chance we do see kind of like a pump and dump like move. For others out there, we have the Russell 2000. That's essentially doing the same thing. Notice that we're still at this trend line right here, right? We have this previous resistance becoming support at this big white trend line. Now we're in a situation where we're trying to hold supports, but we're not doing the best of jobs. We're still very weak right here. I do think there's going to be a rebound move because of this trend line and attempts to get back up towards this resistance around 212 to 210. And then if we can't hold that, we're going to be likely dipping lower and we could be retesting 206. If we break 212, we could attempt to get back up to 215. That's going to be a little bit more bullish. But if we can't hold 212, I'm looking for a rejection. So watch and see if we break through resistance or if we reject. As of right now, 6 out of the last 7 days have been rejections, and we have been making lower highs and lower lows. So there's no true sign of a bottom yet, and there's going to be a risk of us pumping, then eventually rejecting and dipping to the low 205s or below. So keep that in mind. For ES, it's the same thing. Like I said before, we had 6 out of the last 7 days were red. This thing was just dumping, making lower highs and lower lows. But I do want to mention that when you zoom out of ES, it's been forming this channel, trying to rebound a little bit, then dumping again. And then it did the same thing over and over again. So that's what led to this very, very big move. So we have this channel. We tried to break out of this, then we ended up dipping again. And we're continuing to do this. We are trying to hold this support right here. So I'm going to be watching to see if that ends up holding. If not, we will be dumping more. So just like the last couple of days, we tried to rebound a little bit, just like this to about 590, and then sorry, not 590, 5900, and then if we can't get back up of at least 5935 or so, the 20 EMA, you want to break that to turn back up to retest these highs. If we come short of 5900 to 5935, we could just see a temporary move up, then another big rug pull, and we may end up retesting this trend line into like the 5790s. That's going to be our main support. If we could hold this, then yes, that's where we could bounce from. If we lose the 5800 to 5790 area, we could be dumping a lot more. So please keep that in mind. Same thing is going on with the QQQ and also NQ. Notice that we have this resistance. This is where we rejected from. Also, this is resistance where we got this big rejection. So now we're in a very, very critical place where we're continuing to fall. I'm going to be paying very, very close attention to some key trend lines just to see how we end up moving. But just keep in mind, we are still looking a bit more bearish because we were not able to hold 21,000 and the chart's continuing to make lower highs and lower lows. So just to be very, very frank, I think that there's going to be a risk of us dipping lower if this continues. We could attempt some kind of rebound move for 20,700 or so. And if we can't get back above at least 21,000, we're going to be at risk of continuing this downtrend. There might be some kind of bounce tomorrow morning, but then we're going to be at risk of continuing to fall towards this trend line, taking us down to about 20,200, if not 20,000 flats. That's what the trend is suggesting. I will turn bullish if we could close above 21,000, but we'll see about that just to be safe as we look a bit more bearish. Donald Trump announced a crypto reserve. It was not really enough to cause crypto to hold up. We tried to bounce only to get a big rejection. So for now, we look a little bit more bearish. So for the time being, I just want to make it very clear we're still quite weak, and there's going to be a risk of us dipping even lower. I want to see us get back above 88,000 to bounce. We could attempt to retest these EMAs, but then there's going to be a risk of us dipping lower if that rejects, and this could be forming like a bearish structure. And this could be looking for a big move down if that fails us. So watch to see if 85,000 holds. If we pump and dump to it, we need to bounce off of this to turn back up. If not, we could be looking for a move back down towards 82,000. For a few more, we have Nvda. Nvda is on a bit of a downtrend, very, very weak setup, especially after some bad news came out. I went over the news in my intraday video. This head and shoulders has been complete. So typically you'd want to see a rebound, but when you zoom out of the chart like this, right? When you zoom out all the way, you could see that there might be future downside as we're making lower highs and lower lows. We're at a big support right here around this 114 area. So I do think there might be a small rebound attempt in the morning. We could try to get back up to like 116 to 117, but if we can't hold above that, we need to get hold above at least 116 to see some kind of rebound. If not, if we push like this and reject again, there's going to be a risk of us continuing to fall lower all the way down towards like 110 or below, or the low 100s. As far as Tesla goes, on the daily chart, as you can see, we're on a big downtrend, making lower highs and lower lows, but notice that we have this big gap to fill down here. I think that we want to see Tesla get back above this trend line. If it can't hold that, we're going to be at risk of retesting the lows around that 275 area. If that fails us, we could be filling this gap back down to about 250. So please keep that level in mind. So right now, there's going to be a risk of a bit more downside. So we could be making lower highs and lower lows. Look for a bounce attempt for 290. If that fails us, we could continue to fall for 275. And we have to hold 275. Otherwise, this is going to continue to dump as we look more bearish. On Apple, we're barely holding support right now. As you can see, we actually touched the trend line today, which is very, very critical for the way this has been moving. When you zoom out, we have this trend line that's been developing right over here. And this is the support that we've been trying to hold for the last couple of days. Let me actually go to the 4-hour chart to show you this trend line. I want to fix that real quick. So this is the support. We touch this bounce. Now we're touching this. We have to bounce here. I think Apple's going to attempt some kind of rebound move towards like 140. But if we don't hold the trend line, we're going to be at risk of rejecting. And this could be forming kind of like an inverse cup and handle. And it's going to be a risk of us returning towards 232 or so. So we got to hold this yellow trend line. Otherwise, Apple's going to be dumping to the low 230s. For the rest of these, I'm going to be kind of quick, guys. Netflix is in a range. Our resistance is going to be around 990 and supports around 954. So we could be dipping towards 954. So just be very careful. For Microsoft, we're on a bit of a downtrend right now. I want to see it reclaim 263. If not, we could be dipping towards 237. For Celsius, we're on a bit of a downtrend. We're going to be looking at support at 24.6. If that fails us, 22 could be coming. For Supermicro, we're on a bit of a downtrend right here. We're making lower highs and lower lows. I want to see this reclaim 40. Otherwise, this could be on its way down towards 31.5. Palantir is looking weak. There is a slanted possible inverse hand and shoulders. I'm not too sure about this. Could bounce for like 85 before it starts dipping back down for about 80. So keep that in mind. Looks a little bit weak to me. Rivian's looking weak. We could be retesting 11.3. If that does not hold us, I'm looking for this imbalance down here all the way down towards 10.5 for a big rejection. So tariffs could be affecting us. We'll have to see how that goes. For SoFi, we're making lower highs right now. I want to see this try to hold above at least 14. If we can't reclaim that, we could just try to push for 14 and reject and start dipping closer to about many of these lows over here. We have support at 13.13 that could be tested, so watch for that. For AMD, we're on a downtrend right now. I would like to see this reclaim 102.5. We tried to bounce only to get a big rejection. It came very close to my 103 target, and then it got a big rejection again. So it's still bearish. We're going to be looking to see if this can reclaim or test 100. If not, if we just touch this and reject, we could continue to dip towards 95. ARM is bearish, making lower highs and lower lows. It could be testing 120, if not 115. Coin tried to bounce only to get a big rejection. We got to reclaim 216. Otherwise, we're going to be at risk of dipping towards 200. Amazon is also on a bit of a downtrend. I would like to see this hold 205. If not, we could be dipping towards 200. There are gaps to fill in the 190, so be very careful, especially with tariffs coming out. We tried to bounce. I wanted to see this break and hold above 215. We failed so far, so now we're looking a little bit more bearish. Meta has the support right here around this. Well, technically, it's going to be around this like 658 areas resistance. We need to get back above like 680 to really bounce. If not, this is going to be at risk of dipping towards 643, then 630 all over again. Microsoft's on a big downtrend right now. We want to see this break 396 to bounce. Otherwise, we're at risk of 380. Google's on a bit of a downtrend, making lower highs and lower lows. So this is going to be at risk of dipping towards 165. And then for others out there, just to be very quick, GameStop is looking bearish, could be dipping closer to about 24 flats, if not lower. AMC could be dipping to 3 flats or lower. It's still relatively weak. DJT is at support at 23. I'll have to see if that holds up or else 22.5 is coming. The VIX is looking bullish. There's a wick here, so maybe it dips a little bit as the market tries to bounce tomorrow morning. But then there's no sign that the trend is breaking. So even if we do see a small dip here, right? If this dips a bit, there's no sign that this is done yet. It could continue to break out as the market remains bearish as of right now. There's no sign the market is bottomed yet. We have to wait and see how tomorrow and other days go. The 10-year looks bearish, and the dollar is still kind of dipping a little bit. We'll have to see how this responds. This is actually selling off with the markets because of the tariffs, so just keep that in mind. Anyways, that is it for my video. The market is still bearish. We should attempt a rebound tomorrow morning, but it might just be kind of lackluster. And keep in mind, so far, 6 out of the last 7 days have been just pumps in the mornings, then rug pulls as the day went on. The only exception was Friday. We saw the market try to bounce. It was due for some kind of bounce, but the move is still failing. So for now, it's possible we try to rebound a bit, but then there's going to be a risk of more downside if we continue this trend. So just keep that in mind, guys. That's looking very, very probable to me. Anyways, I thank you for listening, guys. Have a good rest of your day. I appreciate you guys for watching this video. I'll see you guys tomorrow morning before the market opens. Until then, get ready for Donald Trump's big tariffs and some more market catalysts. Have a good day and peace out.